The struggle of waiting, how deposit delays affect everyday people in the US. In today's world, where convenience and accessibility are paramount, the experience of deposit delays can be a significant source of frustration for many individuals and businesses in the United States. Let's take a closer look at this issue with a human touch, understanding the standard deposit availability timeframes, the factors behind these delays, the real impact they have on people, and the evolving trends in deposit delays over the past 15 years. The standard waiting game, deposit availability timeframes. When you deposit money into your bank, you anticipate quick access to those funds. It's a given, right? Well, not always. The Federal Reserve's Expedited Funds Availability Act, EFA, lays down some basic rules. 1. Deposits made in person. Typically, you expect those funds to be available the next business day. 2. Deposits made by check. It may take up to the second business day. 3. Electronic deposits. These are often available by the next business day. The intention behind these timeframes is to ensure that you don't have to wait too long to access your hard-earned cash. The complex web of factors behind delays. Deposit delays have become a part of life for many Americans, and it's not by choice. These delays can be attributed to a range of factors. 1. Influx of deposits. With the COVID-19 pandemic altering our spending habits, many have found themselves saving more. This surge in deposits has placed a considerable burden on banks' processing systems. 2. Labor shortages. Banks are experiencing workforce shortages, making it challenging to keep up with the growing volume of deposits. 3. Technical hiccups. Technical glitches in banks' systems have caused delays, further adding to the frustration of customers. 4. Fraud concerns. If banks suspect a deposit might be fraudulent, they'll delay your access to those funds. 5. Hold times for certain deposits. Some types of deposits, especially large or cash deposits, may be subject to hold times, causing you to wait even longer. These factors combined create the perfect storm for deposit delays. Real-life consequences, the impact on people. Deposit delays aren't just an inconvenience, they can have real-life consequences for individuals and businesses. 1. Late fees. A delay can lead to missing payment deadlines, resulting in late fees and added expenses. 2. Overdraft charges. If your account balance can't cover a transaction due to a deposit delay, you might find yourself facing overdraft charges. 3. Financial stress. In the worst cases, these delays can create significant financial hardship, causing stress and anxiety. A growing problem, trends over 15 years. The numbers tell a story of their own. According to data from the Consumer Financial Protection Bureau, CFPB, the number of complaints about deposit delays has risen significantly. In 2012, they received 1,220 such complaints. By 2022, that number had skyrocketed to 10,237, painting a stark picture of the escalating issue. Seeing the human side, an analytical perspective. The increasing frequency of deposit delays is a cause for concern, and it calls for action from banks and regulators. Banks should consider hiring more staff, upgrading their systems, and providing transparent deposit hold policies. Regulators need to step in to ensure that banks aren't engaging in practices that harm consumers. Practical steps: how to navigate deposit delays. To navigate the frustration of deposit delays and protect your financial well-being, here are some practical steps with a human touch. 1. Choose electronic deposits. Whenever possible, opt for electronic deposits. They tend to process more swiftly. 2. Minimize in-person large deposits. Large deposits made in person can be more likely to face delays. 3. Understand hold times. Be aware of the hold times associated with different types of deposits. 4. Stay in touch. If you encounter a delay, don't hesitate to reach out to your bank to inquire about the status of your deposit. In conclusion, deposit delays are a very real issue with a tangible impact on everyday people. It's a problem that affects individuals and businesses alike. And it's essential for all stakeholders to work together to find a solution that keeps our finances accessible and secure.